The word recession is one of the scariest in the world of finance. It sparks headlines, shakes markets, and worries families. But what does it actually mean? And is the US really heading toward one right now? Let's break it down. A recession is usually defined as a period of significant decline in economic activity that lasts for months or even years. In simple terms, it's when businesses slow down, jobs become harder to find, and people cut back on spending. Economists usually look at indicators like GDP growth, unemployment rates, consumer confidence, and inflation to measure how the economy is performing. So, what's happening in the US right now? There are mixed signals. On the positive side, the job market has shown resilience. Unemployment remains historically low, and companies are still hiring. Consumer spending has also stayed strong, meaning people are still buying goods, traveling, and eating out. These are all signs of a healthy economy. But there are warning signs too. Inflation, while cooling down from its peak, is still higher than the Federal Reserve would like. To fight this, the Fed has raised interest rates aggressively, making it more expensive to borrow money for homes, cars, or businesses. High rates often slow the economy because people and companies borrow and spend less. We're also seeing stress in specific industries. The housing market has cooled significantly, with fewer home sales and higher mortgage rates making it harder for buyers. The stock market has been volatile, and many businesses are cutting costs or freezing hiring as they prepare for slower growth. So, is a recession coming? The truth is that no one knows for sure. Some economists predict a mild recession in the near future, while others believe the US might avoid one altogether and achieve what's called a soft landing, where inflation comes down without a major downturn. What really matters is how prepared you are. Recessions are a normal part of the economic cycle. They can be painful, but they don't last forever. The best way to protect yourself is to build an emergency fund, reduce high-interest debt, and diversify your income and investments so you're not dependent on one single source. What really matters is how prepared you are. Recessions are a normal part of the economic cycle. They can be painful, but they don't last forever. The best way to protect yourself is to build an emergency fund, reduce high-interest debt, and diversify your income and investments so you're not dependent on one single source.